Welcome back to the Teaching Tax Flow podcast. Today, episode 185. We are not just looking at some Roth IRAs, but some backdoor Roth IRA conversions. So we're taking it to a whole nother level here. We're going to talk exactly what this is and why we're even talking about this when it comes to taxes. Obviously, is a big question we're going to answer with this. And of course, you don't want to hear it from me. You definitely want to hear it from my co-host, Chris Picciurro. Welcome back, man. Let's dive into this one.
Thank you very much. Yeah, in today's podcast, we're going to talk about a strategy that many taxpayers that are in our red diagnosis in the teaching tax flow community, that means a high marginal tax rate, utilize to contribute money into a tax-free vehicle, meaning a Roth IRA, gold diagnosis, which is tax-free income and growth. And we talk a lot about traditional and Roth IRA contributions, and what happens is taxpayers that have a higher amount of income, and that when I say higher amount of income, that depends on your filing status. If you are covered by a retirement plan by your employer, if you're married, as your spouse, but ultimately covered if you're a taxpayer that their income is too high to contribute to a Roth IRA and too high to make a tax-deductible contribution into their traditional IRA, one of the strategies that we often hear about is called the Backdoor Roth contribution. And part of the Backdoor Roth contribution is a conversion. So you, just like we talk about in the Teaching Tax Flow private Facebook group, it's called Defeating Taxes, and we talk about in the Defeating Taxes book and all over our community, ideas are cheap and implementation is valuable. So before you implement the strategy, I'm going to talk through the steps of it. There's a couple little pitfalls, but make sure you're talking to a licensed tax professional and a licensed financial advisor before you start doing this. I see a lot of people screw this up when they're doing it on their own and trigger the exact opposite of what you want. They actually trigger a taxable event on top of an already high marginal tax rate for a red diagnosis. So yeah, so this backdoor Roth contribution allows people that are otherwise ineligible to put money into a Roth because of their income, the ability to contribute to it. And we've heard, in different election cycles that this, I guess you can call a loophole, is going to get filled, but ultimately it's available, it's popular, and let's jump into it.
Yeah. And Chris, I love, as always, I love certain things about it, right? And I always look at these, again, not being the tax professional. I learned through severe osmosis, is what I say with everybody here. But somebody might be listening to say, oh, well, I don't make enough to have to worry about this, right? Most people think that at one point, like, oh, this doesn't apply to me right now. But it's great to understand the full cycle of this and what is going to, what could potentially come up, because really it goes back to everything we talk about, right? Everything, the core of teaching tax flow, TTF is sometimes you refer to it. It's all about tax planning and strategy. You can't plan afterwards. You have to plan before, right? So when you're walking us through this, I almost visualize this and want everybody to view this as you're looking at a GPS, right? I would say a map if we were 20 years ago. Looking at a GPS, it's showing you where you're going, right? And things are going to happen along the way until you get there. So this is a great thing to know, right? There's limitations, obviously, and there's a strategy and there's a lot to it. So this is great that there's something that's beyond the yield sign or the stop sign when you can max it out, right?
Absolutely. So you can either make a Roth contribution based on your filing status, income, or if you were ineligible, this is where this particular tax planning implementation, which was a behavioral implementation, makes sense. So how do we do this the right way? And this is why, a lot of times people say, well, I'm not sure if I'm eligible. Remember, you have until April 15th to make an IRA contribution that's Roth or traditional for the previous year. And that's why you have that extra time to determine where your income lands. So let's assume you're ineligible to put money into a Roth IRA. You want to, and we know that a Roth IRA is an amazing type of account that provides you with tax-free income and growth and tax-free distributions if those distributions are qualified with the right planning. That's easy to meet those qualifications. So let's say you can't contribute to that Roth. So here's what you do. You make a contribution to a traditional IRA. you ensure that that traditional IRA has no pre-tax dollars in it. So ultimately, it's an IRA you have with no balance. You make a contribution to that. Those contributions are limited based on your age and what tax year you're in. So let's just make an example. Let's say you put $7,000 into this traditional IRA. Because your income is higher, you get zero tax deduction for that contribution. So you've actually contributed uh, funds to a traditional IRA that are non-deductible. So really, that doesn't do you much good, right? This is where the magic happens. You immediately, let's say within one business day, take those after-tax or non-deductible contributions from your traditional IRA account and you convert that over to a Roth account. That Roth conversion, usually that's taxable, but you converted all non-deductible dollars into
Ooh,
the Roth. And now you've essentially contributed to that Roth, and that's going to grow tax-free the rest of your life and hopefully tax-free distributions.
mm,
And bam, that's it.
that's
That is
that's a
a
beautiful thing.
backdoor Roth contribution, and it uses a Roth conversion.
And the way you said that, right? So some people are probably thinking, well, yeah, that's simple to do. And this is a question that just to make sure that I understood what you were saying here. When you say an account that basically has a zero balance, is this a new account or something? But it literally has to have a zero balance in it, right? Can't have anything in it. This is a fresh baby,
It can't
basically,
have any deductible or any
like funds
funds
in it.
in it. The traditional IRA can't have any pre-tax funds in it. So it's easier to just have this account that you utilize to do the backdoor Roth contributions each year and just keep nothing in it. Correct. It doesn't. Now, this is where it gets very sticky. And this is where I've seen this screw up a lot. Okay, imagine you want to put money into the Roth. You make too much money, so you're already in a high marginal tax rate. You have a traditional IRA and with $100,000 of pre-tax money in it. You make a Roth, a non-deductible contribution, and then you try to convert that non-deductible contribution into a Roth. Well, guess what? It doesn't work that way. Now you have attribution rules and only a sliver. So let's say you put in $7,000, only about 7% of that conversion is tax-free. So you don't want to muddy the waters. The best way I could describe it to a client is imagine, John, you are mixing paint, right? And you have red and you have blue, and you want to make purple, my favorite color. Hey, I'm wearing that today. And you mix these paints together. After the paint is mixed, I can't go into the paint and now say, you know what? Actually, I want that red paint back. I want to extract it. It doesn't work that way. So once you put non-deductible money into an IRA that has pre-tax dollars in it, everything gets messy and you have a lot more reporting to do on your tax return, and you have to allocate Roth conversions based on those balances. So the bottom line is this: that's why I'm telling you, implementation is valuable. Implementation is most important. Ideas, hey, this is a great idea, and we provide a lot of great education, but ideas ultimately are cheap and they could backfire. If you do this the wrong way, I had a real case study that came through. Luckily, we were not involved with this client at the time it happened, but it completely backfired. Where they had $100,000 example in a pre-tax account, they contributed, I think it was like $7,500, and then they converted the $7,500 into the Roth, and they only were able to. They had to pay tax on 97.5% of that contribution. It was a disaster. So you want to make sure that that paint can, right, is empty before you put the paint in it. So you want to execute this properly. You want a traditional IRA with no pre-tax dollars in it. You want to make a non-deductible IRA contribution into that specific account, and then you want to immediately convert that to a Roth. Now, married taxpayers, you can do this for both spouses, by the way, but it's the same process for both spouses. So if a married couple, we're seeing, $15,000 to $16,000, $17,000, depending on their age and et cetera, of ultimately Roth contributions every year, even though they were not eligible.
And I'm
And
sure
that's
somebody's thinking this question now, right? Like, "Oh, well, me and my spouse can both do it, but we file jointly." Doesn't matter, right?
doesn't matter. Yeah, your
Perfect.
filing status really does. I mean, your filing status has something to do with your IRA, your deductible IRA contribution. So that the other thing you have to remember is this works when you're ineligible to make traditional IRA deduction contributions that are deductible.
This episode is sponsored by Wealth Builders Mortgage Group, powered by Movement Mortgage, one of the top mortgage teams in the nation and a powerhouse in the real estate investing world. With over $1.1 billion in closed mortgage volume and more than 3,000 investor deals under their belt, they don't just talk the talk, they walk it. Their team specializes in helping short-term and long-term rental investors scale smart with customized lending strategies. They offer all STR loan products, including second home, investment, non-QM, bank statement, asset-based, and HELOCs. They also offer all primary home loan products too. Whether you're just starting out or expanding an existing portfolio, their unique Path of 10 strategy is designed to help you move from a 9-to-5 job to financial independence. If you're looking for a lending partner who truly understands the investor mindset, visit wealthbuildersmortgagegroup.com and start building your roadmap today.
Because if you were eligible to make a Roth, if your income was in a situation or filing status was in a situation where you could contribute to the Roth IRA, then just contribute to it. You don't have to do the back door. The back door is when you want to go to a concert or a sporting event and the tickets are sold out and you got to find another way to get in.
I appreciate you coming up with that analogy. However, sir, I give it 6 months, maybe a year until you can actually beat that one that you gave about the paint can. That goes up there in the record books for one of the best analogies I think you've ever come up with, and I've never heard you say that in 20-something years, so that's awesome. And with
I just
this, I
came
mean,
up
again,
with it now because I've looked at myself and said, "Hey, I'm wearing purple today."
honestly, that may be one of the best ones. That really might be, because 'cause I'm sure people are thinking like, "Oh, I could put 2" it's not like soup, you can't separate it. But
Right.
I'd be curious, right? And this is me again, kind of my personal interest in this, because this is something that I didn't know about for a while. Anybody that's listening, watching this, you have a very powerful tool, whether you know it or not. I'm gonna sound like a used car salesman, nothing against used car salesmen. But there's that little feature, if you're watching on YouTube right below us here, like, literally, I'm pointing to it, I can't mess this up, it's not a left and right reversal thing here. It's a comment section. I would be extremely, extremely curious how many people actually knew this existed, but then also the questions that people have around it, right? Like, I brought up that one about, "Oh, can you do it, independently, but you file jointly?"
Right.
This could get pretty complicated, right? Because everybody's situation's different, so I'm sure every single person that has ever thought about this has a question. So, drop it in
Yeah,
there,
this
and
is and
Chris
that's
answers.
why I would err on the side of caution when doing this and waiting till you know what your final income numbers are, unless you're in a situation where you have W-2 wages that are way beyond the threshold for making a Roth contribution, IRA contribution. So absolutely, this is a very powerful tool. We have clients in our private CPA practice. They utilize this on an annual basis as just part of the tax plan. These conversions or backdoor contributions, they're the same thing. Um, in this case, can add up. What are the pitfalls, right? Eligibility, having pre-tax dollars in your traditional IRA that muddy the waters, and also potentially having earnings in your IRA. So that's why it's important to immediately do the conversion. So for instance, John, let's say you put $7,500 into a traditional IRA and you didn't get a deduction for it. Because you're a genius investor, you forget about it, and that $7,500 goes up to 8,000, and then all of a sudden you're like, "Oh wait, I got to do the Roth conversion," and you convert 8,000. You have to pay tax on the $500. So now the $500 is growing tax free, but the whole point was you're in a high marginal tax bracket. So why are we, that's you don't want to add income to that. So yep, this backdoor Roth contribution using a properly executed Roth conversion is super powerful. The final thing I'm going to mention, and we're going to we'll do a separate podcast episode on this down the road. There is something I feel like now you mentioned the used car salesman. I feel like I'm a used car salesman. There's something called a mega
Oh,
backdoor Roth contribution, and that is utilized by people that are in an employee situation, and it's typically utilized by people that are in a pretty high W-2 wage earning base. So we don't want to go mega, all this,
Right.
but there's a mega Roth, backdoor Roth. Again, we'll do a separate episode on that. We do have some content in the Teaching Tax Flow community, but this is the Roth IRA, the backdoor Roth IRA contribution. Again, common. You don't have to do the max amount. And the bottom line is it allows people that would be ineligible for making a Roth IRA contribution now, provide them with the superpower that they can get money in there legally and ethically. And I agree, John. I'd love to hear from the Teaching Tax Flow community. Is this something you have done? Hey, are you a financial advisor and you recommend this to your clients? Tell us your stories. Give us your questions.
Heck, even if somebody's a tax professional, I'd love to see how many people have had a client come in the door like, hey, look what I did last year. They're so excited about it. And then they look and say, as my daughter would say, you made an ouchie. And she'd hit you with a Band-Aid. But
you don't want to make a financial ouchie. And that's exactly what it is.
I'm going to tell her that. She's going to be so happy you said that. But yes, everybody check that out. Check out defeatingtaxes.com. That'll actually drive you to the Facebook group Chris mentioned a little bit earlier. There's book, there's resources, there's everything on there. But again, you are already empowered. Exactly like I said, the comments section below, that's a direct line to somebody who knows what they're talking about. And again, it's not. Let's be honest here. It's this guy and everybody else in that community. So check it out. Don't be lazy. And I'm glad you guys joined us with this one. This was obvious, or for this one, I should say. This was something, again, I didn't know about for a while. Chris had mentioned it, and it intrigued me. So I'm glad we had it on the roster for the podcast. As always, we'll see everybody back here again next week on the Teaching Tax Flow podcast. Have a great week, everybody.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciurro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.